Hello, my name is Binam.
Hi, my name is Olu.
In this video, we are going to show you an exercise on international investment appraisal.
The sample question and the solution are going to be available in the blog www.banksandmarkets.wordpress.com.
You click Finance inside the blog and scroll down a bit until you find International Investment Appraisal. You click the exercise question, that's the question file. You click the solution, which is the solution available in Excel. So once you click this exercise question, you'll get this exercise question, which is basically an investment appraisal question for a mutually exclusive project. Option 1 is the export project, and option 2 is the foreign direct investment project. If you see option 1, this is similar to normal investment appraisal question. So in the solution file for option 1, you will find out the capital outlay, which is 210,000 in total, which includes the equipment and working capital. You'll find out earning before interest and tax, after tax, earning after tax, and the net annual cash flow for the entire period of the project will be 72,800. Now, because this is the same annual cash flows for the entire period of the project, you can apply present value annuity factor, which is 6.145, and you will get the net present value of 241,211. On the other hand, if you see the foreign direct investment project, this is again similar to ordinary investment project, but it has some additional information related to tax holiday and withholding tax, and this also requires some knowledge of double taxation. So basically, the tax holiday is temporary reduction or elimination of tax. So this is something, Olu, we can see in this exercise.
Yes, from the question, there is a tax holiday for the first 5 years, and tax holiday is the temporary reduction or elimination of tax to encourage foreign investment.
So therefore, there is no tax charge for all these first 5 years. So in this case, the Brazilian government is encouraging foreign direct investment.
Exactly.
But after 5 years, between years 6 to 10, the Brazilian government is charging 30% tax. Therefore, in the profit before interest and tax of 240,000, it is 72,000 every year.
Yes, that's correct.
Now, before the American company, Good Pharma, would like to take the money back, there is something that the company is paying to Brazilian government, which we call withholding tax.
Withholding tax is a government requirement for the payer of an item of income to withhold or deduct tax before making such payments. So before the company, the subsidiary based in Brazil, before they can repatriate the profits to USA, they have to pay 10% withholding tax.
Okay. There is also now a concept about tax credit, and I think it has to do with the tax that has been paid earlier.
Yes, that's when the concept of double taxation comes in. Double taxation is the levying of tax by 2 or more countries on the same declared income. So in order to adjust for that, tax credits will be given by the US government on any amount that is already paid abroad.
So that the company doesn't pay tax twice.
Twice, exactly.
But if we see here, this amount which was paid, which is 16,800, is not given as credit full 16,800. It is only 9,600.
Yeah, the reason for that is because the tax credit, the total tax credit given by US will be limited to the tax amount based on US tax rate, which is 81,600. So because total has to be limited to 81,600, the balance that can be given here is 9,600.
Alright, so basically the total of 72,000 and 9,600 will add up to 81,600. If we keep 16,800 here, it will exceed 81,600. So the government will not allow that kind of tax credit.
Exactly.
After that, one important rate which is different in these two options is the cost of capital, which is 10% for the export-based project and 12% for the foreign direct investment project.
Yes, this is where the concept of high risk, high return comes in, because the foreign direct investment is exposed to more risk of country risk, political risk, economic risk. So we have to use a higher discount rate of 12%.
Yes, exactly. When the investment goes outside the boundaries of one country, there are those risks that have to be addressed. Therefore, the differential cost of capital. The notes are also available underneath the calculations. These are related to the withholding tax and tax credit. We hope that this exercise will be fruitful for for the audience who would like to practice international investment appraisal.
Yes, anybody that is interested in international capital budgeting and user appraisal will find it very helpful.
Yeah. Thank you for watching this video, and do not forget these exercise and solutions are available at www.banksandmarkets.wordpress.com. Thank you.
Thank you. Bye.